Hi guys, this is Dr. Sadasivam once again with you. We often talk about not putting all eggs into one basket. The same thing holds good even in the stock market because a lot of people keep asking me, sir, what do we do? What is the best strategy to follow? Whether buying call options or investing in stocks or investing in mutual funds or writing options. The answer is very simple, guys. We need to have a balance of everything, little bit in mutual funds, little bit in writing options, little bit in equities, little bit in buying options, etc. There is a perception in the option market, there is a perception that people believe that you will be able to uh, uh, make money in options by writing options and not buying options. And they also say that most of the option buyers lose money because 95% of options bought, they expire worthless. You have a lot of concepts like max pain, open interest, etc., which I don't want to take up in this particular session. But all said and done, buying option is also very, very important because whenever you write an option, you should buy an option also because that's one of the best risk mitigation strategy. So this is as far as the option strategy is concerned. Now the next question is, can you put all your money in options? Absolutely not. You need to have a mix because there is a certain level with which you should play with options. I'm not talking about big organizations where you have employed whole lot of people to do this job. I'm talking about mutual funds, etc., because their job is to look at what is happening in the market, what things are happening around the world. But people like us, we cannot afford to do that because whatever I am talking about is concerning a retail investor who works in a corporate or who has limited amount of money, right? When I say limited amount of money, I'm talking about 10 lakhs to probably 1 crore is what I'm talking about, right? I'm not talking about people who invest more than 10 crores and 20 crores. This video is not for them. There are other techniques for such people which I will try to discuss in a different video, right? And that also needs to be discussed on a case-to-case basis depending on their risk appetite and host of other factors. But this, I'm talking about people who invest somewhere around 10 lakhs to 1 crore. Now if you ask me what to do with people who invest 1 lakh, 50,000, 2 lakhs, 5 lakhs, that's a separate video. This does not apply to them. Now when you talk about options, we've talked about how buying option is not a good idea. Only writing options is better, because we discussed that whenever you write an option, you need to buy an option because that's one of the good risk mitigation strategies. We've already talked about that. So why should we put money into all this? Why not one? Sometimes when people come and ask me, sir, what is the return on investments that these can fetch us? I usually tell them that returns on investment is infinite. There are ways to do that. I repeat, I'm telling you, return on investment is infinite. But what does that mean? Let me explain that to you. If you don't invest anything, listen to my point very carefully. If you don't invest anything, even if you get 10 rupee return, then the return on investment is infinite. Do the math yourself. Work out, answer that, because we are talking about returns without any investment. Now you might think, how is it possible? I'm confirming to you, yes, it is possible. For example, imagine a beggar sitting outside a temple. His return on investment is infinite because when he sits in front of the temple in the morning, he starts his business with zero investment. But at the end of the day, he takes along with him some 250, 300 rupees. We don't know how much. I have not done any survey on that particular profession. But the return on investment is infinite. That's what I'm talking about, right? The same thing holds good in options also. There are ways and means of doing that. I'm sure some of you are aware of that. You can have equities, you can pledge those equities with the broker, and with that pledged amount, you can sell options, right? Of course, for buying option, you need cash. And of course, market to market losses, you need something. But there are ways and means, many ways and means of doing that. Even if you have mutual funds, you can pledge your mutual funds and play options. So many people keep asking me whether we put it in mutual funds or put it in shares. Because instead of breaking your head buying shares, you can always buy mutual funds. That's a genuine question. But let me clarify that for you. Mutual fund guys are those who play with huge funds. For example, can you imagine how much of SIPs, I'm talking about systematic investment plans, AUMs, assets under management, how much is the total money involved in SIPs as on date? It is approximately 6 trillion rupees, guys. 6 trillion rupees, 6 lakh crores. And every month it is on the increase. Approximately 10,000 crore per month is the inflow, which includes your equity, exchange traded funds, balanced funds, etc. These are various kinds of mutual funds. I'm sure some of you are aware of it. So we are not getting into that because that's totally a different topic. I'll be putting up another video on that subject. So what does this mean to us? Little bit on mutual funds, little bit on shares, little bit on options. Now the question is whether you should put your money into directly into equities or mutual funds, or investing them in mutual funds. You have to do everything, guys. Why mutual funds? Yes, you have to. Why not? But why equities? Yes, you should. Because when you deal with mutual funds by definition, they have huge assets under management. I'm talking about the entire country. We talked about 6 trillion rupees, because that's all the funds put together. Let's consider one mutual fund, HDFC for example. You have a fund manager who is managing your funds. What it does typically is investing your money into balance of stocks, right? Mid caps, small caps, large caps. They have their own ways and means of doing their analysis. All that is being monitored by SEBI, and there are so many regulations they have been put into place. 2 years back, mutual fund managers were free to do anything, right? They were not able to show innovations. But protection of consumer interest is also important, and that is why SEBI has put in lots and lots of regulatory balance mechanisms, checks and balance mechanisms, just to protect the consumer interests. But at broad levels, should you invest through mutual funds or should you invest in the share market directly? You have to do both. On one hand, you have a fund manager who is doing his job, and let him do that. Now your question is, why not put 100% of your money into mutual funds? Why not? Why should we put in equities? Because what holds good for X capital does not hold good for 100X capital. Because when you play with equity, you pick up 1 or 2 stocks, you think the return on investment will be huge, and you're taking that risk. You can multiply that particular money much faster than how mutual funds can multiply their money, because mutual fund managers are playing with other people's money. They will not take huge risks. The risks will be very calculated because their future, their promotions, they all depend on how much returns they bring for shareholders, and they will play very, very safe. Maybe one of their KRAs for them. So in 1 month, if he brings in about 4 or 5%, he will lose his reputation. But in your case, you can take big risks. You can go for things which can give you 30% or 40%. Suddenly, if that comes down to 1 or 2%, at least you won't lose your capital. So you can take big risks which the fund manager may not be willing to take. But you take that risk for his personal money, but he will not take that risk with the public money that he is managing. Now, if you ask me what proportion, Remember what I said initially. Certain things that work for, say, 1 lakh capital cannot work for 1 crore capital. I'll give you an example for that. For example, if you are a vegetable vendor, you can make 100 times 2 times profit, 100% profit, right? How? Right in the morning at 4 o'clock in the morning, all vegetable vendors do that. You take your small auto, you go to the main market. In Delhi, it is Asad Nagar. Probably in Chennai, you have a Kottawal Savdi or something like that, a wholesale vegetable market. You can go to that market, buy vegetables for, say, approximately 2,500 rupees, your onion, potato, mirch, whatever. Come back in the evening, put up a small shop right on the platform, not a shop, on the platform for 3 or 4 hours. Maybe start at 6 o'clock and close at 10 o'clock. The entire, you can sell it for 5,000 rupees. There is no doubt about it. You invested 2,500 rupees and you're taking back 5,000 rupees, which is, you have doubled your income, which means 100% profit, right? No investment, nothing. All you spent was some 7,500 rupees for the auto rickshaw to go to the market and come back. There's no other expenses other than this. Normally, those guys tie up with an auto wala who will come every day at a specific time, drop them, and all those things work. 100% profits, right, guys, right? You have doubled your money. But it works for 2,500 rupees. But when you have 50 lakh rupees, can that become 1 crore? It cannot. There is a limit up to which you will be able to play, because for everything there is a threshold after which you may not be able to make that kind of a profit. So what applies for a vegetable seller does not apply for a guy who is working in the stock market. This is a bird's eye view of how things work in the stock market, and in the subsequent videos I will be coming up with lots and lots of concepts, and I will also tell you how to play this game very well, because I have been playing this game for the last 15 years. I understand the nuances. I've burnt my fingers. I've learned a lot in the process. But we will keep releasing these free videos, completely free of cost. Learn as much as possible. Subscribe to this channel and get benefited. Thank you guys. This is Dr. Sadasivam signing off till we meet again in the next video. Bye bye. Jai Hind.